Assalamualaikum warahmatullahi wabarakatuh. First of all, this presentation is prepared for Semota bin Awang, which is our auditing lecturer. Me and my group members are going to present about inventory and warehousing cycle. Before we start our presentation, let me introduce our group members. My name is Nadira binti Muhammad Zulazhar. My group members are Nur Atika binti Abdul Aziz, Muhammad Nazmi Arif bin Suhaimi, and Nur Atira binti Rosli. First of all, let me start with the classes of transaction which related to the inventory and warehousing cycle. The first one is bank or cash account, which is to make payments, and then purchase account to record the amount of raw material being purchased. Next is creditor account, which is to record the invoice from vendor. And the last one is inventory account to record in or out of the inventory. There are 8 assertions which is related to the inventory and warehousing cycle. The first one is cut off, and then detail tie-in, completeness, rights, classification, realizable value, existence, and accuracy.
Assalamualaikum warahmatullahi wabarakatuh, and hi, my name is Muhammad Nazmi Arif bin Suhaimi. Today I will present about inventory and warehousing cycle. For an introduction, let's take a look about what is the inventory and warehousing cycle. The inventory cycle is unique because of its close relationship to other transaction cycle. For example, for a manufacturing company, raw material enters the inventory and warehousing cycle from the acquisition and payment cycle. Meanwhile, direct labors enter it from the payroll and personnel cycle. The inventory cycle ends with the sale of goods in the sale and collection cycle. To be clear, actually, for inventory and warehousing cycle, they are related to one another. For example, from raw material is we get it from the payment and acquisition cycle, and then the person or the laborers who perform the process of production is from the payroll and personnel cycle, and it ends with the finished good, which in turn to be in the sales and collection cycle. Next, we move to the flow of the inventory cycle. The first flow is receive raw material, which means the management receive the raw material, and then the management place the raw material in a storage, which means in a warehouse. And then after that, the management transfer the raw material purchased for production purpose. And next, the management will arrange the finished goods, the complete goods into the storage bag before the finished goods are ready to be shipped to the customer.
My name is Nur Atika binti Abdul Aziz. I'm going to explain the assertions for completeness of the inventory and warehousing cycle. We need to make sure that all the inventory are recorded completely. The audit objective for completeness is to check whether all the inventories are recorded completely. The inventory is counted and tagged are accounted to make sure none of the inventory are missing. The internal control for completeness is all the administrative expenses that incurred during a year should be recorded. Next, all the amounts owed to brokers for security purchase must be included in the liability. The classes of transaction and related account for completeness is firstly raw material account, direct labor account, manufacturing account, finished good account, payable account, receivable account, inventory account, and lastly purchase account. The audit procedure for this assertion is firstly test of control. We need to observe account for a sequence of the purchase order. We need to examine the inventory to make sure it is staggered. We need to observe whether the movement of the inventory takes place during the counts. We need to inquire the account of all the used and unused tags to make sure none of the inventory are lost or intentionally omitted. Second, for the substantive test, we need to make test of details of transaction that will be used to examine the inventory at the end of the accounting date that need to be audited. The audit evidence for the both test, which is test of control and substantive test, is requisition purchase, receiver report, vendor invoice, purchase order, cost of accounting record, perpetual inventory master file. The possible misstatement that may occur for completeness is overstatement or understatement of the inventory and cost of goods sold, absolute inventory that which affect the amount of the inventory and cost of goods sold, overstatement or understatement of the unit cost that will affect the amount of the inventory and cost of goods sold.
For the next management assertion is realizable value. It means that obsolete and unusable inventory items are excluded and not being calculated. Okay, what is the audit objective for realizable value? It is to check whether there are inventory items that are obsolete and unusable. For the relevant account for realizable value are requisition document and account payable. Okay, the internal control for realizable value is the inventory management personnel will review the inventory to check either there are obsolete, unusable, slow moving or excess quantities. And then periodically or annually, the management will compare the goods on hand with the perpetual inventory records. Next, the audit procedure for realizable value. And as usual, we have two types of audit procedure, which are test of control and substantive test. For test of control, the auditor will test for obsolete inventory by inquiry of factory employees and the management. And then the auditor will discuss with the management and test procedure to identify the obsolete and slow-moving items. Other than that, the auditor will review the inventory. He must make sure that all the inventory are recorded at the fair value in the financial statement. And the second one is substantive test. During the inventory count, the auditor must identify the quantity of the damaged goods, and then he must alert for the items that are obsolete, rust or dust covered or located in inappropriate places. And then we have three types of audit evidence for realizable value. The first one is raw materials perpetual inventory master file. The second one is cost accounting records, and it is comprised of master files, spreadsheets, and reports. And the last one is the physical inventory. For possible misstatement of realizable value is misstatement of recording the obsolete and unusable inventory items.
This means that although the auditor have looks for the inventory, maybe he still mislooks for some inventory that are unusable or discovered, and the company still incurred it as the normal inventory.
Next assertion is cut off. The information is obtained to make sure sales and inventory purchase are recorded in the proper period. The audit objective for cut-off is to check whether the sales and inventory purchases are recorded in the proper period. Next, there are 8 class of transaction and relevant account which is related to the cut-off. The first one is raw material account, and then direct labor account, manufacturing account, finished goods account, payable account, receivable account, inventory account, and purchase account. Next is internal control. For control procedure, the management has to record transaction date as soon as possible after goods and services have been received and follow the correct accounting period. And all employer contributions for the year have been properly recorded even if received in the subsequent year. Next is audit procedure. For substantive tasks, the management has to compare dates of receiving report and vendors' invoices with dates in the acquisition journal. For test of control, they need to examine procedure manual and observe whether unrecorded vendors' invoices exist on inventory. Next, the audit evidence for cut-off is cost of accounting period and perpetual inventory master file. The last one is possible misstatement. The possible misstatement for cut-off can be improper sales and inventory purchases dates and unrecorded inventory.
Okay, now we move to the next management assertion in warehousing and in inventory and warehousing cycle. The next management assertion is accuracy. What is accuracy? Accuracy is inventory is counted accurately. That means auditor needs to evaluate the company's inventory, whether it is counted or recorded accurately or not. So we move to the audit objective. What is audit objective of accuracy? Audit objective is to check whether the management are using the correct price to value the inventory and to obtain documentation that an adequate physical examination was made. The next is class of transaction and relevant account. For class of transaction and relevant account that involved in the accuracy assertion is raw material perpetual to master file account, when the invoice, manufacturing account, finished good account, and also costing inventory record. For the internal control for accuracy assertion is the first one is the auditor needs to do is in performing inventory valuation, the method used must be followed with accounting standard. That means the auditor needs to evaluate the management procedure when what type of valuation that they use in order for auditor to access or to examine the accounting standard, their accounting standard. Second is the auditor need to observe the client accounting procedure. The third is make inquiries of client personnel about their accounting procedure. The fourth is the auditor needs to investigate whether the management apply the method used that consistently from year to year. And the last one is the auditor needs to consider the cost versus the market value, whether the replacement cost or net realizable value, in order to verify the price of inventory. Okay, the next slide is about audit procedure of management assertion as for accuracy. They are divided into the audit procedure is divided into two categories, which is test of control and substantive test. For test of control, the auditor is responsible for evaluating and observing the client procedure, including doing test count on the inventory, and the final is drawing a conclusion. The second is the auditor needs to verify the inventory by confirmation with the custodian, which means the person who in charge in the custody of the inventory. The auditor can make confirmation with the the custodian to ensure that whether the audit procedure is accuracy or not, is accurate or not. The last one is auditor make independent reconciliation account with perpetual inventory master file. For substantive tests, the auditor will determine whether the management use what kind of method. It is LIFO, FIFO, weighted average, or other valuation method. And second is to compare physical count with perpetual master file. And the third is record client count for substantive tests for subsequent years. Last but not least is audit evidence for accuracy assertion. The audit evidence that involved is reconciliation of the document, perpetual inventory master file, receiving report, and also cost of accounting record. And for possible misstatement, management assertion will do the misstatement if they are not correctly record or count the inventory in proper manner. So what is the possible misstatement that might be occur? The first one is overstatement or understatement of unit costs, which affect inventory and cost of goods sold. The second is overstatement or understatement of inventory. And also the last one is inventory might be wrongly recorded by the custodian if no supervision are presented.
Assalamualaikum, I'm Nur Atira binti Rosli. Today I'm going to explain about management assertion, which is classification. What it means by classification is all the inventories are correctly classified. And what is the audit objective of classification? It is to check whether all the inventories are correctly classified by the management. The relevant account for classifications are vendors invoice, stock issue confirmation, and stock transfer issue. This means that the auditor can use vendors invoice to check the types and the quantity of the inventory that are purchased by the company. For internal control of classification, the raw material requisition and finished goods perpetual inventory master file can be used to classify the inventory into raw materials, work in progress, and finished goods. Okay, for audit procedure, we have two types, which is the first one is test of control and the second one is substantive test. For test of control, the auditor can check the classification of the inventory, either it is in compliance with accounting standards and company accounting policies. And for the substantive test, the auditor can examine the inventory description on the text and then compare it with the actual inventory for raw materials, work in process, and finished goods. We have three types of audit evidence for classification, which is the first one is vendor's invoice, cost accounting records, and the last one is raw materials receipt schedule. The last part that we will discuss is possible misstatement. It is misstatement classification of inventories. This means that although the auditor have do all the tests, it is still possible for some inventories are wrongly classified, especially for big companies that have a large amount of inventories.
Now I'm going to explain the assertions for right and obligation for inventory. The audit objective for right and obligation is to check whether all the inventories reported in the financial statement represent right and obligations of the client. The client has right to the inventory recorded on tax. The classes of transaction and relevant account for right and obligation is purchase account, payable account, requisition account, vendor invoice, and costing inventories record. The internal control for right and obligation is an investment should not be reported as an asset unless it is owned by the plan. The liability should be reported only if they represent an actual obligation of your client, not the obligation of an insurance of the company or another entity. Inventory is held on the third party is included, and inventory held on the consignment are excluded. Next, the audit procedure for right and obligation. Firstly, we need to make test of control, which is test of the operating effectiveness to determine the actual amount of the inventory and to avoid misstatement. We need to review the board minutes for the evidence for the legal rights or the title of the inventory. We need to inquire about the consignment or the customer inventory included on the client premises. We need to be alert on the inventory that is set aside or specially marked as indication of non-ownership. For the substantive test of right and obligation, we will make review on the entity procedure for consignments of the inventory. The audit evidence for the assertion is vendor invoice, cost of accounting record, perpetual inventory master file. The possible misstatement that will occur from right and obligation of inventory and warehousing cycle is overstatement or understatement the inventory and cost of the goods sold.
For part of management assertion in the inventory and warehousing cycle, they have existent assertion. Existent means inventory balance reported on financial statement actually exists at the reporting date. For an audit objective, the auditor want to check whether all the inventories are recorded completely. And the class of transaction and relevant account that required is raw material account, direct labor account, manufacturing account, finished good account, payable account, receivable account, inventory account, and the last one is purchase account. For management assertion of existence, they have internal control, which is the auditor want to evaluate a proper segregation of duties and physical to safeguard the inventory in order to prevent the fictitious inventory. The second is use pre-number and properly approve receiving report and material requisition for inventory transfer. And then we go to the audit procedure. For audit procedure in the existing exception, we have they are divided into two procedure, which is test of control and substantive step. For test of control, the first one is account for a sequence of purchase order, and number two is select a random sample of tag, numbers and identity, the tag with that number attached to the actual inventory. For substantive test, the auditor want to examine whether the test of detail of transaction is used to examine the inventory at the end of the accounting date to be audited. And also, the auditor want to observe whether movement of inventory take place during the count. The next slide is about audit evidence and possible misstatement for existing assertion. For audit evidence, the auditor want to the audit evidence is comprised, which is the first one is receiving report, second one is requisition purchase form, the third one is vendor invoice, the fourth is purchase order and cost of accounting record, and the last one is perpetual inventory master file. They are for management assertion of existence. There might be a possible misstatement that will occur in the audit work. For example, overstatement or understatement of inventory and cost of goods sold. The second is potential of inventory become obsolescent. And the last one is consignment inventory might be intermingled with own inventory.
The last assertion is detail tie-in. The management has to correctly record their inventories in the inventory listing schedule that agrees with their physical inventory count where the extensions are correct. And then they need to correctly record the total amount of inventory that are correctly added and agrees with the amount in the general ledger. Next, the audit objective for detailed tie-in is to check whether inventory recorded is agrees with the total amount in general ledger. And then there are 6 class of transaction and relevant account which is related to detailed tie-in. The first one is vendor's invoice, and then costing inventories record, stock confirmation issue, stock transfer issue, stock transfer receipt, and stock requisition. Next is internal control. The management has to follow the inventory listing schedule for raw material, work in process, and finished goods in the account balance that agrees with the total. Also, they need to ensure the recorded of shipment and the receipt that is printed during their physical counts of their inventory. Next is audit procedure. For substantive tasks, the management has to investigate the inventory listing schedule and compare it with the actual in the general ledger to detect error. Next, the audit evidence for detailed tie-in is physical inventory purchase input, vendor's invoice, stock requisition, and inventory listing schedule. Last but not least is possible misstatement. The possible misstatement related to detailed tie-in can be understatement or overstatement of inventory and cost of goods sold. So that's all from 4 of us. Thank you.